If you are on Medicare right now, or getting ready to enroll, and you have ever looked at your monthly premium statement and thought that number seems higher than it should be, I want to start by telling you something Medicare does not announce when you sign up. Your monthly Part B premium is not based on what you earn today. It is based on your tax return from 2 years ago. So if you had a strong income year before, you retired your final year of work, a property you sold, a withdrawal from a retirement account, a Roth conversion that is the income Medicare is using right now to set what you pay each month. For some people, that means paying anywhere from $80 to nearly $500 more than the standard rate every single month for income they no longer have. That extra charge has a name, IRMAA, the Income-Related Monthly Adjustment Amount. According to the Centers for Medicare and Medicaid Services, the standard Part B premium for 2026 is $202.90 per month. But if your modified adjusted gross income crossed certain thresholds on your 2024 tax return, you are paying more, and the reason is not printed clearly on the statement you receive. What most people are never told is that there is a specific form administered by the Social Security Administration that can fix this when your income dropped because of a qualifying life-changing event. We are going to cover that form before this video ends. But first, we have 4 other programs that belong on every Medicare enrollee's radar. And we are going to be specific about who each one actually reaches. Quick context before we start. This video is made for adults on Medicare or approaching enrollment, particularly those navigating cost questions that nobody clearly explained at sign-up. The goal is to walk through 5 programs that can reduce what Medicare and related bills cost with honest income limits, asset limits, and application steps for each. Everything here comes from publicly available official guidance, the Centers for Medicare and Medicaid Services, the Social Security Administration, and reporting from Kiplinger and the National Council on Aging. This is educational content only. It is not personalized financial, tax, or legal advice. And nothing here is a promise that you will receive any specific payment or savings amount. Everyone's situation is different. Before any major decision, talk to a licensed professional. Or contact your state's free state health insurance assistance program counselor, who can review your specific circumstances. We have 5 programs. The order today is number 5, number 3, number 1, number 4. And we close on number 2, the one that matters even when the income limit conversation does not apply to you. None of these programs arrive automatically. Every one requires you to take a step. Number 5, Medicare Savings Programs. If your monthly income falls below certain levels, there are 3 federal programs administered through your state's Medicaid office that can pay part or all of your Part B premium. And in the most comprehensive case, your full Medicare cost sharing. The Qualified Medicare Beneficiary Program, or QMB, is the most comprehensive. According to the official Medicare website, the 2026 monthly income limit for QMB is $1,350 for a single person and $1,824 for a married couple. QMB covers your Part B premium, deductibles, and Medicare copayments and coinsurance. Providers who accept Medicare are prohibited by law from billing you for those amounts. If your income is a little higher, 2 related programs called SLMB and QI cover, at minimum, the monthly Part B premium. For SLMB, the limit is $1,616 per month for singles and $2,184 for couples. For QI, it extends to $1,816 for singles and $2,455 for couples. These are federal baselines. Some states set higher limits. Here is what most videos leave out. There are also asset limits. Under federal guidelines, the limit is $9,950 in countable assets for an individual, or $14,910 for a couple. Your home and 1 vehicle do not count. but savings accounts and investment accounts can. States including California, Connecticut, and Delaware apply no asset limit or a much higher one. So checking your state specifically matters before assuming you do not qualify. One transparency point worth raising: directly enrolling through these programs brings you into the Medicaid system. The Medicare cost sharing paid on your behalf through Medicare Savings Programs is specifically exempted from Medicaid estate recovery under federal law. But if you also apply for full Medicaid for other services, those long-term care costs for people 55 and older can be subject to estate recovery in most states. You can apply for a Medicare Savings Program without applying for full Medicaid. A state health insurance assistance program counselor can explain what that distinction means in your state at no cost. Number 3, home energy costs. The Low-Income Home Energy Assistance Program, LIHEAP, administered by the Department of Health and Human Services, pays your utility company directly, not a discount. An actual payment applied to your gas or electric bill. Income limits are generally set at 150% of the federal poverty level, roughly $22,400 per year, for a single person in 2026 if you are 60 or older. Most states give you priority access, which matters because LIHEAP is first come, first served, and funding runs out before year-end in many states. Some states require a shutoff notice as a condition of eligibility. So check your state's rules. Dial 211 to find your local LIHEAP office directly. The Connected Weatherization Assistance Program, also through the Department of Health and Human Services, sends a technician to your home to insulate, seal drafts, and repair or replace heating equipment at no cost, permanently lowering your energy bill. Number 1, prescription drug costs. If you have Medicare Part D and your out-of-pocket drug costs are a significant burden, a program called Extra Help, also known as the Low-Income Subsidy, changes what you pay at the pharmacy. According to the Social Security Administration, the income limit for Extra Help in 2026 is approximately $1,956 per month for a single person and $2,644 per month for a married couple, meaningfully higher than the Medicare Savings Programs. Asset limits are also more generous, approximately $17,220 for a single person and $34,360 for a couple, not counting your home, one vehicle, or burial funds. If you qualify, Extra Help caps your copay at $5.10 for generics and $12.65 for brand name drugs per prescription. Once your total out-of-pocket drug spending reaches $2,100 in a calendar year, your copay drops to zero. The application through the Social Security Administration takes roughly 15 minutes and can be completed online. If you are already enrolled in QMB, SLMB, or QI, you are automatically enrolled in Extra Help with no separate application. Number 4, property taxes. If you own your home and you are 65 or older, nearly every state offers some version of a senior property tax benefit and exemption, a freeze, or a circuit breaker credit that limits taxes as a percentage of your income. Savings can range from a few hundred to several $1,000s per year. The step is a single call to your county assessor's office. Ask what programs are available for senior homeowners in your county. Some carry residency requirements or income caps, and most require an annual application. AARP maintains a property tax benefit finder organized by state. If you want a starting point, the key is acting before the next tax bill, not after. Before number 2, let me tell you about Patricia. She is 68. A retired registered nurse from outside Pittsburgh, not wealthy, not poverty level. She retired in early 2023 after a final year that included selling a rental property she had inherited. When her Medicare began, her Part B premium showed $389.90 per month. She called and was told it was based on her 2023 return. She accepted that and paid an extra $187 a month for over a year, more than $2,200. She did not need to spend. A free appointment through her state's state health insurance assistance program introduced her to Form SSA-44. She filed it with a retirement letter and documentation of the property sale. Her premium was reduced within 2 billing cycles. Patricia is an illustrative composite based on commonly reported experiences. Individual outcomes depend on specific documentation and Social Security Administration review. Number 2. The IRMAA appeal. According to the Centers for Medicare and Medicaid Services, the 2026 IRMAA surcharge for single filers begins when modified adjusted gross income on the 2024 return exceeded $109,000. At that first tier, the total monthly Part B premium becomes $284.10. Higher income levels push the premium to $389.90, $495.70, $601.60, and at the highest tier, $689.90. For married couples filing jointly, these thresholds roughly double, starting at $218,000. One figure circulating in other videos is $103,000 as the 2026 threshold. That was the 2024 threshold. The correct 2026 figure, confirmed by the Centers for Medicare and Medicaid Services, is $109,000. If you have seen the lower number elsewhere, check your actual 2024 income against the current one. The 2-year look-back is the mechanism. Your 2026 premium is based on your 2024 return. If that return included income you no longer have because you retired, lost a spouse, or lost income producing property Form SSA-44 lets you ask the Social Security Administration to use a more recent income figure instead. The qualifying life-changing events are specific retirement or reduction in work hours, loss of income-producing property, death of a spouse, divorce, marriage, and the end or reduction of a pension. A voluntary Roth conversion or voluntary account distribution does not qualify, worth noting if that is your situation. According to Kiplinger's reporting on this process, if approved, the adjustment typically takes effect within 1 to 2 billing cycles, and a refund may apply for any overpayment during review. If denied, 3 additional appeal levels are available. Here is the recap. Number 5, Medicare Savings Programs QMB, SLMB, and QI with income limits between $1,350 and $1,816 per month for singles and federal asset limits in most states. Number 3, LIHEAP pays your utility bill directly. Dial 211 to find your local office and apply early. Number 1, extra help. Caps prescription copays at $5.10, generic, and $12.65 brand name. Available to singles up to approximately $1,956 per month. Number 4, senior property tax exemptions in nearly every state. One call to your county assessor. Number 2, the IRMAA appeal through Form SSA-44 with the Social Security Administration. For anyone whose premium reflects income from a year that included a qualifying life-changing event. 3 steps. Check your premium statement for the words income-related adjustment if it is there, and your income has since dropped due to a qualifying event. Form SSA-44 is the response. If you are in the lower income ranges, reach your state's state health insurance assistance program before applying to anything. It is free, and those counselors know your state's rules specifically. And verify every figure against current official sources before acting, because these amounts update every year. If you know someone who retired recently and started Medicare for the first time, share this with them. The IRMAA appeal has a practical window filing sooner after the qualifying event recovers more billing cycles. The next video covers the annual recertification process for Medicare Savings Programs, what triggers removal, and what keeps you enrolled. That is the follow-up worth watching next.